Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 6th of April. It's definitely been a busy week this week, a very volatile week with risk off. I hope you all made a little bit of profits, or at least stayed safe and didn't lose too much or blow up your account or anything like that, which really you shouldn't be doing. But let's get into this week ahead. And next week, the trade war will remain a key focus, with traders evaluating the impact of US tariffs and potential responses from other countries. In the US, CPI and PPI data will offer insights into how tariffs are affecting inflation, while FOMC minutes could provide further clues on the Fed's policy outlook. In Europe, attention will turn to Eurozone retail sales and Germany's industrial production, while the UK's monthly GDP report is expected to show a slight economic rebound in February. Meanwhile, China will release March inflation and trade data. So, yeah, we've got a fair few things that should potentially move the market from a data perspective, but ultimately, really, it's all about tariffs and what the effects of tariffs will be, the retaliations. What number will the tariffs settle on? So, yeah, this week is going to be I guess you could look at it as a tricky week or not, because ultimately money should really flow into safe havens, in terms of the Forex pairs like the yen, the Swiss franc, which they have been, as well as, gold and silver. But ultimately, again, things can turn quite quickly if deals are reached. So we have to be very mindful and kind of on the ball, and not necessarily get fixated and have confirmation bias on the pairs that we're looking to trade, or I am anyway looking to trade this week. So starting off on the US dollar, and again, really kind of highlighting what's the market sentiment ultimately is, and what the data is really saying as well, or potentially looking to say, is the worst stock market meltdown since COVID deepens as recession odds soar. So it says here, in every corner of the financial markets, from stocks to bonds to commodities, investors sent Donald Trump the same unmistakable message: the trade war has unleashed. He unleashed is threatening to set off a worldwide recession, and fast, with China retaliating less than 48 hours after the US president rolled out his punitive tariffs. Traders are pricing in what increasingly looks like a negative feedback loop as Trump shows little signs of backing down. The frantic 2 day sell off unleashed by Trump's decision left little unscathed, hammering stock prices in Asia, Europe, and the developing world, and prompted investors to race to safe havens, like government bonds. So pretty much risk off is the order of the day. Of course, this is where China hits back at Trump with tariffs and limits on key exports. So ultimately, they hit back with 34% tariffs. The VIX closes at its highest since 2020 as stock slide accelerates. So the VIX is a volatility index, and also seen as a fear index. So it says here the CBOE volatility index closed at the highest level since April 2020. 2020 being COVID, as a spiraling trade war pushed the S&P 500 to an 11-month low. And it says here, we've only reached these kind of levels of global risk pricing really during crisis periods, said Stuart Kaiser, head of equity trading strategy at Citi. That's not necessarily capitulation, but I think it does tell you that the markets is in a stressed situation. So looking at the VIX, you can see here, anything above the 20 is normally seen as more severe risk off. Anything below is seen as less risk off and more risk on, the more closer we go towards zero, right? So you can see pretty much, fear, uncertainty, doubt, in the market is at some, some serious highs at the moment. So that's really, like as I said, what's driving prices. And credit fear gauges saw most since banking meltdown in 2023. So gauges for credit risk are signaling just how nervous investors are getting about what Bank of America analysis describe as the biggest shock to global trade in modern times. US President Donald Trump sweeping tariffs sent indexes that track credit default swaps surging by the most since March 2023 in both in US and Europe. The CDS contracts are used, the credit default swap contracts are used to hedge against the risk of default. The market CDX North American Investment Grade Index, the most active CDS contract in the world, jumped as much as 8.5%, or actually it wasn't 8.5%, 8.5 basis points to 75.7 basis points, according to prices compiled by Bloomberg. CDS indexes are a popular way of hedging risk because they tend to be more liquid than regular cash bonds and an easy way for traders to reduce or add risk quickly. So, again, from all pretty much aspects, risk is off. And so we did have a lot of volatility on the dollar overall in terms of the dollar equally weighted index. But for me at the moment, there's too much negativity around the US dollar. So I think it's safer to say now. Before I was kind of sitting on the fence with the dollar. Now I've got more of a bias, and my bias is really to the short side. Now, do I think that prices will reverse here? I have no idea. But in terms of looking at this from a confluence perspective, any pullbacks really on the dollar, I think, should be seen as selling opportunities, unless, of course, every other nation then, basically this week says that they are, succumbing to Donald Trump's tariff demands and it gets sorted out quickly, then I think actually the dollar should be more of a buy. But I think there's a date in terms of we have until like the 9th of April, a little bit of a window where there's still room for negotiation before these tariffs actually really get implemented. So they've been announced on, I think, the 5th, or no, sorry, I think it was the 3rd. But the 9th is when it actually comes into place, I think. So let's see what happens this week. There's still room for negotiations, but as long as there's uncertainty around the market, I think the dollar should really be more of a short than a long, as there's too much uncertainty around recession, around interest rate cuts, and the effect of tariffs. And if Europe now then come out and say, well, they're going to increase tariffs and retaliate on the reciprocal tariffs, and other nations do, then it does look very uncertain for the US dollar at the moment. So that's really where we are with the dollar, short bias. Uh, Dollar yen, again, more of a short bias. So really waiting for more pullbacks, I think, on the dollar yen. I'm a buyer of the yen, but would it be necessarily against the dollar? I think there are opportunities. I think there are better trades, though, like, for example, the commodity currencies. So but looking back, if you want to, or looking at this, you want to look for sell trades, then any pull back up into maybe the 150s is a good opportunity to look for a sell trade. Dollar Swiss, similar thing, although there was demand here, of course. As I always say, there's no technical analysis that's going to stand in the way of fundamentals and risk sentiment. That's really, the most powerful that's really the drivers of markets, right? It's not some indicator that's telling you to buy or sell. It's really what's going on in terms of value and fundamentals. So again, if you really want to be a buyer of the Swiss franc and a seller of the dollar, then you're looking for probably one of two things to happen: either a pullback all the way up into a supply zone, and the supply zone probably will start around here, or you're looking for a price to kind of do lower highs, lower lows, so a bit, maybe a bit of a move down, then a move back up into a supply zone before looking for a short trade somewhere around here. Um, the dollar CAD. Now, the dollar CAD was a bit of a surprise because I thought that the US dollar would have a bit more of an advantage than the Canadian dollar. So I was saying last week that a pullback would have been a decent buy opportunity, but it seems like the narrative is heavily against the US dollar. I thought the US dollar would actually benefit from the risk off environment. Other currencies have, like I said, the yen as well as the Swiss franc, but the dollar not so much. Maybe because of the fact that there's lots of negatives around it. So we did have a bit of a bounce at the 140s, 140, 50 area. I would say that there could be an opportunity if you are looking to buy the dollar against the consensus, a bit of a contrarian trade, that could be a decent buy. And I wouldn't necessarily look to buy the Canadian dollar, to be fair, in this environment. This isn't a pair that I'm really interested in anymore. There's better trades out there to take. But if you do want to be a seller of this currency pair, then you're looking at a trade to the downside and buying the CAD or buying the dollar. The pound, I'm a buyer, more of a buyer of the pound overall. I've been saying over the past couple of weeks that I thought that the pound was a little bit more of a sell, but that was before really the tariffs started to take effect. I think now the pound should be one of the pairs or the countries and currencies that are insulated from the tariffs, simply because of the amount of trade that they do with the US, in comparison to China or Canada. And it doesn't seem that the UK is really in Donald Trump's crosshairs. So yes, we've pulled back a bit here, but this actually could be a really nice buying opportunity. And if that does break down, then I think the next area to look for a buy trade would be here, or if, of course, prices create some sort of demand zone where prices make a bit of a move, maybe here, then you pull back into that zone before looking at going long. But my bias would be to be more long than short, the longer that the tariffs remain unresolved. Pound yen, for anyone who got involved in the pound yen short from a couple of weeks ago from up here, well done. Of course, you've chosen the right direction. Risk off. So that's where we are in terms of risk off. I think ultimately, the money should really kind of flow into the yen in a risk off environment. So any pullbacks, that's what you're looking at, or you're looking at, again, maybe a bit of a more of a lower low than a pullback into a supply zone before looking at going short. All right, so those really are the options at the moment for the direction of travel. Euro dollar, sorry, actually this is the euro index. Now the euro index has been actually a surprise beneficiary of risk off. And let me just scroll back up. So it says euro emerges as unlikely winner from Trump's trade shock, because unlikely meaning, before, I guess, the trade tariffs, the consensus would have been that the dollar would probably be, because historically it is more of a risk off currency in terms of it appreciates in a risk off environment. But every risk off event is nuanced. You can't just take it for granted that this will happen or that will happen. And really, fundamentals is really just the study of the reasons why traders are long and short. That doesn't include price, right? So what are the fundamental reasons why, from a value perspective, are traders looking to buy the euro and sell the dollar, right? And it says here that the euro has become an unlikely winner from US President Donald Trump's bid to redraw the global trade order. The currency surged to its highest in 6 months versus the dollar this week, with its biggest intraday gain since 2015 on Thursday after Trump unveiled tariffs that were more aggressive than expected. Citigroup strategists revised up their euro targets, while options sentiment over a 1 year horizon turned bullish for the first time in 4 years. It marks a shift from just 2 months ago when many in the market anticipated the euro slide to parity versus the greenback on the risk that tariffs would force the European Central Bank to cut rates more aggressively. Now, investors are more concerned about Trump's policies potentially harming the US economy and reversing sizable inflows into dollar assets of recent years, and that's key, right? So, if inflows into dollar assets are reversing, then where are they going to, right? They're going into other assets outside of the US, which would be the beneficiary would be the euro, and the pound and other markets, right? So it says here the euro is likely to be one of the major beneficiaries of a slowdown or reversal of these inflows because of the degree to which these were provided by euro area investors, says Dominic Bunning, a strategist at Nomura, adding that there was a scope for a structural realignment buoying the common currency. So a structural realignment going on. So with all that being said, the euro has been a beneficiary in terms of the equally weighted index. So across the board, you're seeing the euro just rise. So if you do want to be a buyer of the euro, is right now the right time? Unfortunately, not. You'd have to wait for at least prices to get a bit cheaper or a higher high to be made, and then a pullback into that higher high before looking at going long. If you're using the euro index as confluence, which I tend to. So actually, I say I tend to, but I always do. So looking at the euro dollar this week, we have seen a move to the upside, blasting past this area of supply. Now, if you do want to get involved in buying the euro and selling the dollar, again, really you're going to have to either wait for prices to move back down to the 108s before going long, or wait for prices to make higher highs, pull back into that zone, and then look for a trade to the upside. I think prices may be reacting off of this level of resistance turn support. So if it does react off that, make some highs or at least move to the upside, then a pullback into that zone there, maybe a decent trade, because then that would create actually a nice demand zone, and then look to for buy trades. But again, as long as the risk sentiment and the fundamentals are saying so. Euro yen. So euro yen, the yen should be more of a beneficiary than the euro, which we've seen over the past couple of days. Not necessarily by a massive amount, but we have pulled back to, I say pulled back, but we've kind of reversed at these highs. I was kind of marking out last week. And so, yeah, if you do want to be I think a buyer of the yen and a seller of the euro, I'm not really interested in this pair, but I think that the supply zone really does start from there. Bit of a tricky one, because really when you have a wide zone of supply, what you really want to do is wait for obvious levels of support and resistance, whether they're uh, horizontal. You can look for diagonal as well, which is known as trend lines. If you're looking at that as a bit of a trend line, an area to look for some trades, then potentially it's really you're looking for prices to maybe come up into this zone where you've got more confluences there before looking at going short. But this isn't a pair that I'm looking to trade either way. I think if I'm buying the yen, it'll be against a weaker currency, and if I'm buying the euro, it would definitely be not against the yen at the moment. Looking at the euro pound, and again, the euro being quite a dominant currency over the past this week, we did see a pullback into a level of demand. I was saying this last week, and then it literally blasted off. Didn't say necessarily to buy, but just saying that what the options were. and it did react to this demand zone. So if you are looking at buying the euro versus the pound, again, not really a pair I'm interested in. I think there are much better divergences to trade. Then I think really your only choice is to, again, wait for either a pullback down into the 0.835s, or again waiting for higher highs to be made before looking at trading there, or you're waiting for a sell trade to buy the pound and sell the euro. But again, from a fundamental perspective, not really a trade that I'm looking at. Aussie dollar, so this was again more risk off sentiment, and the Australian dollar really has suffered this week. The commodity currencies have, and I'll go into my trades. This week's trades were actually really good. I think like 3 or 4 winners, no losses, and so again, it was just important to get the direction right, and I'll go over that in a sec. But if you're looking at the Australian dollar, again, it doesn't necessarily do well, and I think in a risk off environment, and I think because of China's retaliation, it ended up affecting the commodity currencies like the Australian dollar and the New Zealand dollar a lot more. So I think if you're looking for a trade, the direction of travel should be really to the short side. Again, a bit of a trickier one because the dollar is also suffering a little bit in terms of the narrative around it. So, but it just seems like the Australian dollar is in a worse position. So that's where we are when it comes to the Australian dollar. Again, a pair that if I'm looking to buy the US dollar, then that would be the pair I would look to trade it against. But at the moment, I'm looking to short the US dollar. So I'm not really too interested in this currency pair. Looking at gold, and gold has pulled back. Many traders are probably saying, why has gold pulled back in a risk-off environment? Really, it could be for several reasons. It could be, and again, it's just a pullback, right? It's not a reversal. There's a distinction, but it could be just because, and this is what I think, whenever you get moves to the downside against, a risk sentiment or a fundamental bias, it's really just probably taking out a lot of people's stops, right? A lot of people, a lot of traders are buying at highs, right? And if there's not enough buy orders, right? If there's not enough buy orders, or sell orders, I should say, really, it's sell orders to facilitate buying. Because if there's heavy buying going on and everyone wants to be a buyer, who is selling? Yeah. And if there's not enough sell orders to facilitate the amount of buying that traders want to do and investors want to do, then they have to look for those sell orders. And if you're looking to buy, then your sell order, your stop loss is below the market. So um liquidity hunting isn't just 5-10 pips on a 5-10 minute time frame. Stop hunting and liquidity hunting can be hundreds and hundreds of pips, even thousands of pips. Rarely that it is thousands of pips, but I've seen it happen in the market. But where you can, where the market now is searching for the liquidity, right? So they're searching for the sell orders. Where's the sell orders? Below the market. So that's basically what needs to happen. Pull back. The market hasn't pulled back and to any decent amount in terms of fair value or anything for since the beginning of really of the year. So I was saying to the traders in the private members group that I wouldn't be surprised if prices actually pull back to maybe this area here, right? Before investors really see that as an area to look to for a reversal. And I say reversal, but a reversal from a short-term downtrend. And that being a really nice buying opportunity, because as I said, when you have a move that has not really had a major pullback, you typically eventually will get a major pullback and a deeper pullback, right? So the smart money maybe profit taking here. At the same time, there's liquidity hunting going on, searching for those sell orders so that the investors can buy for cheaper after they've taken some profits at these highs. Traders get stopped out, wondering what's happening. The medium to longer term investors get to buy back in after taking profits around here, and then look to reload and rinse and repeat. Right, that's ultimately what I think is happening. Now, again, nobody knows for sure. We could see price actually just start to reverse, bounce off of here and continue to go higher. But in terms of just understanding why there is a pullback, that's normally the reason why, if it's against the strong sentiment or strong fundamentals, right? It's just a case of liquidity hunting. Investors get to buy for cheap. Market makers obviously, need to make money as well on the short side. So ultimately, just look at this as a nice buying opportunity, as long as nothing hasn't changed fundamentally for in terms of risk sentiment. And then you've got the S&P. The S&P at the moment, of course, just falling like a stone. As from an investment perspective, actually, I think you should get more excited about buying the S&P and buying into the S&P, not necessarily buying everything all at once, of course, but at least scaling in. The overall, the S&P is, for me, um, will be a buy. Yes, we've had corrections. This was a what was this a at the time, a 35% correction before prices went all the way up, right? So at the moment we are at about a 20%, I think it is something, yeah, about 18% move to the downside. It looks like, of course, the sky is falling, but ultimately, even if it does fall around 30% from a medium to long term investment perspective, this is just buying the S&P at discounts. I don't think it's the end of the dollar and the S&P per se. I just think that, of course, we have market cycles, market crashes, and then when the dust settles, then of course it's really about value buying. But in the short term, to go against this is going to be very, very, very difficult. So yeah, I would say the path of least resistance should really be to the downside in the short term, right? Definitely to the short term in the in downside in the short term. So to try to catch a falling knife, as they say, I wouldn't necessarily do that. I would probably even just wait for some sort of bounce. If within that bounce you do get risk sentiment and the VIX start to fall and everything starts to, China agree that the tariffs are fair, and so does the US, and trade deals start to come into play, and then any pullbacks into that zone would be really then the buy. But while we have a lot of fear, uncertainty in the market, really the path of this resistance should be to the downside. So wait for any pullbacks, and then you would have to kind of wait for these to sell off, then a move back up to a created supply zone, which would be around there, around here, and then looking for a sell trade there. So that's really where we are in the short term direction of travel. But medium to long term, I am looking at being more of an investor and buying the S&P. So that brings us to the end of our weekly analysis, trade updates. So you can look at the analysis from last week. So this was the Swiss yen. Took profit at a 1 to 1. It's difficult to. I think the yen should really have the advantage over the Swiss franc in terms of fundamentally. But in a risk off environment, it's a lot trickier because money's flowing into both the Swiss and the yen. And so downside potential may be a little bit limited. So decided to just take the majority of profit off on one position. So again, from last week, I entered here, ended up taking profit as prices went that around here on the Wednesday. Prices did pull back a bit, and when you have two competing currencies as well, and I want to say competing, I mean, um, two strong currencies. What you typically tend to have is a ranging market, right? An auction, a sideways moving market, right, where you have something like this trends happen when you have massive divergences between in the fundamentals and the risk sentiment. So if you go to, for example, the Australian dollar, any Australian dollar pairs, or commodity currency pairs, the New Zealand dollar, then that's where you start to see the trends, because the divergence between the risk sentiment, fundamentals, safe haven plays are a lot more pronounced. With the Swiss yen, they're not as pronounced. So you start to get moves like this. So taking profit at 1 to 1 on that trade was decent. The New Zealand dollar ended up hitting profits and going further than my profit target, which we ended up getting into two positions. One was a 1 to 1, and the other, as you can see, was, I think, about a 3.5 to 1. Ended up being a nice trade right there. I took 80% of what was, again, the range. So when you're buying or selling, this was seen as a expensive area, and I normally try to take profit target at 80%. Could I have, could it have gone further? Yep, it could have held on a little bit, but figured that was enough. What I'll do is I'll wait for a pullback up into a level before looking to reestablish some shorts. Euro New Zealand, again, I went over this last week, but this is just an update because the profit was taken on the Monday. So managed to get in again on two positions. One was a 1 to 1. Right, one was a 1 to 1, and then the market order ended up being it's like about a 3 to 1, somewhere around that. And again, my profit target was 80% of the auction. My final one, which it hit on the Monday, so that was nice. And then prices pulled all the way back down. Could have entered around here again, but in the way that I enter, I didn't actually see an entry, or there wasn't a valid entry, and prices went to the upside again. So it was getting the direction right is the most important thing. Once you get the direction right, then it's a case of just your technical analysis, whether it says to enter or not. But ultimately, this was a profitable trade. The direction was correct. I was right in my fundamentals, and made some money on that. And then you got the CAD yen, which also hit profit targets. So again, we ended up getting on two positions, one on a 50% pullback that hit a 1 to 1, and then I was left with the market position, and that ended up hitting 80% as well. So this week, so that was on the Friday, prices pulled back 80%, and then kind of did a bit of a reversal there. But yeah, managed to take profits. So yeah, all the trades that I've been in all hit profit targets. The only trade that I'm in, I established this week, a new trade, was the pound CAD. So pound, I think the pound is going to be a bit more of a beneficiary, or least affected, I should say, from the tariffs, and the CAD, I think, is going to be a bit more affected by the tariffs. So ended up getting involved in this trade here. So this was from a demand zone perspective. There was some demand here. There was some higher highs being made, right? High, pull back, higher high. As prices pull back into this area, ended up getting triggered into three trades. Now, typically what I should have done is entered right here. The first trade there, second trade is there, and then the third trade is here. Now, I wasn't at my desk when I should have got involved in the trade. When I did get to play some trades, prices actually were at a much better level. So I ended up entering two trades around this 1.836 area, right? So about two trades there. So the two trades that I would have entered there and there ended up entering around here, and then ended up entering the third and final trade at 1.834s. Now, nearly got stopped out immediately. Prices did, kind of overshoot that area. I think this has the capacity to be a stop hunt into next week. I'm hoping so. Otherwise, this is going to be a very short trade, and I get stopped out on three positions. But if not, if I'm right about this trade, then hopefully, and my stop is wide enough as well, then hopefully we should move to the upside. So lots of potential, and in fact, is again, because I entered around this area here, my risk reward is actually going to be a lot better in terms of upside potential. So let's see what happens this week with the pound CAD. I think the CAD should want to sell off, and I'm hoping that it does. And I think that the pound should hopefully want to at least rally a little bit this week. So let's see what happens. If this trade doesn't work out, I'm still looking for some long trades, but I think the next long trade may be, have to be down at this demand zone here, right? Demand zone. Also, as well, this was a little bit of a smaller trade than usual than I would usually take, as it's not necessarily as strong or stronger conviction that I would have, for example, for buying the yen. Um, but so my position sizes were slightly smaller on this one, about half the position size I would normally take. So if I do lose the three positions, it is what it is. It's a smaller position in a risk-off environment. But if I win, then hopefully it will be obviously a smaller win, but it depends upon, of course, how high this goes. So let's see what happens with this trade. Anyways, guys, I hope you found the analysis useful. I hope you have a great trading week. Please manage your risk. It's sometimes better to just sit on your hands and watch than try to take unnecessary risks if you're unsure. And so it's okay. You've got the rest of your life to trade. You don't necessarily have to take unnecessary risks. Don't blow up your account. No need for it. And just stay safe. And hopefully you can get some profits this week. Take care. All the best.